Hello, it's Robert Miner with Dynamic Traders Reports and with our YouTube video update for Saturday, February 23rd. I apologize I did not have an update last Saturday because a week ago Friday I got married, so I took the weekend off if that's okay. Sound all right? Cool. But I'm back now. We'll be back every Saturday. We put up some review of the markets and some immediate potential trade setups for the following week. Well, let's take a look at a couple markets right now. The first market I'm going to look at is gold because it's in a very unique technical position right now, and for a potential setup, trade setup, the first part of next week. So this is a weekly chart of gold, and finally, this past week, gold made a what we call a dual look back bear reversal on the weekly data, and that's after having been about several weeks of dual look back overbought position. So we make the bear reversal, more than likely we've completed a weekly high. And that's pretty significant because it should be a high that lasts longer than any of the corrections going back to the August low. So that would be not just a week or two or three, but probably 4 to 6 weeks, at least 4 to 6 weeks sideways to down off of last week's high, which was made just short of the 78.6% retracement. This is 162% external retracement of the wave 4. So we've been looking for a weekly high for 2 to 3 weeks, and this is the first signal we've got that it's probably complete. This is the daily data, and as of Thursday, we had this big, sharp down day on Thursday. We made a dual look back bear reversal in the daily momentums. And that's significant because the weekly momentums were overbought. Now, as of the end of the week, they've made bear reversals. So we got a dual time frame momentum bear reversal. The high was made last week at the 127, 162% external retracement of wave 4. We had projected that as the probable limits on the upside. That was just below the 78.6% retracement. And then we had a couple time factors Monday and Tuesday, not as a target for the high, but as what the maximum time should be to complete that weekly high. That's the 25th or the 26th. That's the low, high to high, and then the simple high to high to high. So we have made the bear reversal on, actually it was made on Thursday, so we made it a couple, 3 days earlier than, again, this was the maximum time probable to complete that high. So we're really in a position where more than likely gold, silver, the GDX, mining stocks, etc., are in a position to begin a weekly bear trend. So great trade opportunities. And also, if you happen to be long any of those markets, well, certainly bring the stop really close to the market. And a close below Thursday's low at 1323.30 on gold confirms that a weekly high is complete. I'm not going to go into the details of these time factors, but if that becomes the case, if we make that close next week below 1323.30, gold should be sideways to down at least into the week ending March 22nd. And that's in that week is not only the spring equinox, but it's the next FOMC meeting, and it's also the 100% alternate time projection of the longest correction since the August low. And this decline, this weekly decline, should be greater in time than any correction since the August low. So that means it should exceed actually March 21st. So there's some other time factors later in March, early April, but we're just looking at the minimum. Sideways to down into the third week of March if we close below 1323. And if we do that, we anticipate the minimum downside would be around the 50% retracement. 1280 will round up, which is right at this wave 4 swing low. So that's it for today on, well, you know what? Let me take a look really quick at one other market, the S&P, my favorite. Well, this is the S&P, or the ES weekly data, and I've been looking for a probable weekly high in the ES for the last 2 to 3 weeks or so. Keep in mind that the objective of trading is not to forecast, it's to identify conditions with a high probability outcome and acceptable capital exposure. Well, each time that the market has gotten into a the S&P or the stock indexes, into a position, technical position, to make a weekly high, which has been about the last 3 to 4 weeks since the weekly momentums were dual look back overbought, and we're at some other price and time positions or factors for a potential high. The S&P and the ES, the other stock indexes, have never made a reversal signal. So until they make a reversal signal, the trend is up. Well, they've continued up, and into this past week. And this past week had two significant weekly time factors we want to be aware of: the low to high. That's usually the extreme for a reversal of comparable to these other weekly reversals, which means at least 2 or 3 weeks at a minimum, just based on the time. And then it's the simple high to high to high. Really narrow range week this week. The other significant thing is it's the fourth week when it's dual look back overbought, regardless of the time period. When you're in the fourth period, that's usually the extreme before you make a reversal. So up until this past week, there had been no reversal signals. So the market has just continued higher, and we had a reversal signal this past week. So this is the ES Daily, and on the ES Daily on Thursday, we made an outside three-close reversal. And that means it was an outside day, and it closed below the closes of the past 3 days. Now, in the cash index, it was not an outside day. It did not make a new high, because that new high that's shown on this Thursday's data was made overnight on the 24-hour data. So that was a significant signal that the top, if it's not complete, it's very near complete. And as I did in a special trade strategies tutorial for our subscribers on Thursday, identified the kind of setup we'd look for that would confirm that a top has been made. Well, on Friday, that setup was not made, but we're still looking at that kind of setup for Monday or Tuesday. That's taking out a minor swing low with a lower close. Pretty simple. And with the potential, once that setup is made, and again, we don't go short just because it's at significant time or price relationships, or we make a momentum bear reversal. We go short once those technical conditions are in position, and then once we have the trigger to enter the trade. We haven't had that yet, but I suspect we're going to have that Monday or Tuesday. And it's going to be really minimal capital exposure for a potential decline to around the 50% retracement over the next 3 to 4 or 5 weeks. So that's what we're looking at over the next week. Just be aware, daily momentums just last week for the first time made a bear reversal. That was weekly momentums made the bear reversal last week. Daily momentums made a bear reversal on Thursday. We're dual time frame momentum bearish, and we're at some significant price relationships, and real simply, we're at these swing highs that were made back in November, December. So just be aware, get those stops close if you happen to be long, and we've got a potential short opportunity coming up early next week. That's it for this week. If you like what you hear, check out our DT reports at dynamictraders.com.